What's up, YouTube? What's up, Discord? We got a late night video here on Open Door Technologies. Uh, this is a retail pump and dump at the moment. The reason I say that is it's all over social media. Okay, you're hearing about it on TikTok and obviously Wall Street Bets, Reddit, you name it. I'm bringing it on YouTube. Okay, let me actually. As much as I would like you to like, comment, share, and subscribe, I'm going to actually hide this. It's kind of taking up a lot of retail. Where the hell is that? There we go. Okay, so we got rid of that. I'd had a significant pump in the last 2-3 weeks. It's the 20th. It started pumping July, what? I don't know, 8, something like that. It went parabolic in the last few days. Okay. And people think that this is the time to buy. So I wanted to do some research. They're FOMOing it. This is called FOMO. When a stock goes from 50 cents to 265, it's up over 500%. It's simple math. Okay? 265 divide 50 cents is 530%. Okay? It's not like you're getting a deal. Oh, it's the next Carvana. Fuck it, $2.50. Who cares, right? Well, sure. Okay, but is it the next Carvana? So the reason Carvana was going to go bankrupt is interest rates were increasing. Interest rates were increasing while we were stuck in a pandemic, and we couldn't get chips for cars, for new cars. We couldn't get the chips. And the cars that the dealers had were just being sold at market or higher. So everyone was going to the used cars. They benefited greatly from a global pandemic. That's what saved their business, the global pandemic. And unaffordability and unavailability of cars, new cars. People went used, and they've never looked back. Great on them for pivoting, in management and getting things turned around. And, it's a massive success story. Open Door isn't in that same position. Okay, the market is becoming overly saturated. If you've read about, insane amount of home availability in Florida and elsewhere. We're talking 50,000 listings on there, guys. Just Google it. The availability of homes on the market, it's insane. No, people are losing their homes to refinancing conditions, like they can't actually qualify. So maybe 5 years ago they qualified for a $1,600 mortgage. The mortgage is now $3,200. It's doubled. They don't even qualify. They don't have the income. So now they're losing their homes out from under them. The houses are going on the market for 80%, because the banks are auctioning them. And they start at 80% and go down from there. Open Door got in so early. They got in at the very wrong time in 2022 and have been losing a insane amount of money ever since. They're still losing hundreds of millions of dollars right now, but it's possibly going to turn around for them. Okay, in the interim. This is a possibility. I don't know. Nobody really knows, because they were set up to file for bankruptcy protection. Okay, they have a proposed stock split on June 25 that they announced plans to reverse the stock, 1 for 10 or 1 for 50. We all know when they do a reverse stock split, and that's just to avoid being delisted. They're not in that situation right at this moment, but they have to stay above this price for multiple weeks for that to happen. So if they were to have a significant drop down anytime soon, if shorts were to re-enter, that could be a cause for them to still go through with this. Now, they could still go through with this because they had already intended to do it. They have 730 million shares, according to my broker. It matches the exact information that Grok is giving me. So Grok says 729.13 million. My broker also says the exact same. It has no borrow rate, which is very odd for a short squeeze, guys. For GameStop, and for AMC, and even for Redbox, the borrow rates were approaching 900 to 1100% annually. A credit card is 19.99. Now it's like 21.99. They just raised it up. This is zero. It doesn't even cost anything to short this thing. That is extremely unusual for any sort of short squeeze. Webull, for example, is 25%. Highly shorted stock, right? 25% borrow, and the short margin is 250. The short margin on Open Door was only 100%, a dollar for a dollar. SRFM is kind of a stock that's been pumping on Palantir associations. Palantir owns 19% of it. Short squeeze stock, 250% margin requirement to short with a borrow rate. Seeing no borrow rate on Open Door is like a flashing warning sign that what we're seeing here is possibly going to lead to retail holding the bag. I would love to have entered, and still kind of want to enter because of all the attention it's getting, but that is what the very definition of FOMO is. The trader in me wants to enter at support. It wants to let this thing crash to 224 and even maybe 185. VWAP is down here, guys. The daily RSI ended Friday at 91. That's not normal. If you know what an RSI is, and that's not to say that it won't pump first thing in the morning here as soon as pre-market opens up. That's not to say it won't. But you can almost guarantee that it is that it's going to come down from there. It broke the wedge, but this was Friday was monthly options expiry. So you had the weeklies and you had the monthlies. That was part of what was kicking this off, okay? You had some guy come out and say, oh, this could be a 100-bagger, blah, 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 pumping it up. He's obviously front-loaded it. There was so many front-loaded calls on it, it's not even funny. There's multiple analysts on it, guys. None of them have changed their revisions. They're saying yesterday, an analyst came out from KBW and said, hold it. And he gave it $1 price. He is not a good analyst. He has no rank. But, Andrew Boone from Citizens JMP downgraded it 23 days ago. And in 2 months and 4 months, people from like JP Morgan, Citi, Bank of America, they haven't changed shit. They're hold, and sell. There's 1 buy, 3 hold, 1 sell in the last 3 months. That's it. And Bank of America is giving it a 68-cent sell. They haven't updated it. Now, I'm going to make a note for you guys that what you should do is you should follow JP Morgan. You should follow Dan Lee. He's got a high success rate. And just follow them for upgrades and downgrades. Get alerted to Open Door upgrades and downgrades. If JPM gets behind this, okay, I would pull the trigger. I was watching an old video of mine where we were talking with one of the guys in the Discord who made over $500,000 when the banks were collapsing from only $6,000. He was blown out by AMC, and then he came into the Discord, came into the group, learned how to trade, and made $500,000 from those banks collapsing. SBNY, Western Alliance, which is now like $80, and First Republic. Back in like 2023, okay? And he mentions, and I mention, we're talking about how JP Morgan is like the biggest bank in all of America, right? They have the largest cash holdings in America. They're the #1 biggest bank. If they give something a buy rating, pull the trigger. If they give something a sell rating, pull the trigger. Release the guillotine, right? So that is something I'm going to be paying attention to since they have an analyst on them. Some stocks don't have analysts, okay? Webull, it doesn't even have an analyst yet. It's been listed for a little while, no analyst. Hood, bunch of analysts. Okay? Palantir, bunch of analysts. $9 stock, $160 now or whatever it is, right? So again, if Open Door gets a JP Morgan, I'm specifically talking about them, If they get some kind of revisiting of this, and JP Morgan is like gets behind whatever they're selling, I would pull the trigger. Okay. We've got, there's been some news on it, but it's mostly just pumper hype and FOMO bullshit. That's about it. Okay. There's not really a whole lot going on there outside of that. So I wouldn't really look too much into that. Now, if you want to pull the chart back and you go, say, 1 year, 1 day, you know, in the last, it's almost recovered its entire 1 year decline in a matter of a few days. If it were to fill these gaps, right, maybe you're looking at 266. That's not a far cry from 225. What people are really looking at are these zones here, okay? There's multiple supports here of like 427. Sorry, resistances at this point. 427 with a baseline support, all over the place around this 155 to 216. Is it a good time to enter? Yeah, like it might be, but the fact that they have proposed this reverse split is concerning. They also have a whole lot of dilution happening from stock awarding. So when these companies are falling a lot of the times they just give themselves shares and start selling shares and making you hold the bag, selling them to you, selling them into heavy volume. It's a concern as well. Grok can't determine if they still have active shelf registration of about 300 million shares. If they do, we're talking like a 40% dilution on the stock. Unfortunately, it's not as cut and dry as you would expect. Now, I went in and I started looking at some of the SEC filings on it. Okay, this is just a typical BlackRock one. It says BlackRock owns 1.7% of the stock. They did this the other day on I want to say Navitas, saying that they owned like 5 million shares, and everyone was pumping the stock. And I love Navitas, but everyone was pumping it. But it's actually them letting you know that they got rid of 6 million shares. They had over 11 million, and then they said they only had like 5 million. So this is just something they have to do all the time. This is just a normal filing, okay? So I wouldn't really look too much into BlackRock ownership. BlackRock owns every single ticker, guys. Who owns BlackRock is the question. No one seems to know. But BlackRock owns something of every ticker. And so 1.9% is not a strong vote of confidence when usually they own about 5+% of every ticker. Okay. I also noticed some selling from this Sidney Schwab, but it's very odd. He's not selling much. Like he's done one for 125 shares where he owned 125 shares at $1.31. He had another filing. It was like $256. This one was kind of large, right? 17 grand for a dollar each. So it's probably part of an active plan where I don't know what the hell this 125 stuff is though, because I've seen a few of them from him. Here's like 125 shares, $130. What's the point? I have no idea what the point is of selling that little of shares. Or even $17,000. Like, I guess that's a little bonus for him, something like that. And he's still holding a decent amount of shares. I haven't actually seen much selling going on other than that. I'm looking at filings. I would try to go back. It's tough to decipher everything, right? And we don't know how far to go back on some of this sometimes. But like here he is. Here he is back in January, February, March, April 16th, selling 126 shares for only $115. Like, it's almost embarrassing, man. You're the chief. What the hell is he? He's like the chief legal officer or something like that. I just what is the point, man? You need $100? That bad? It's very odd. I mean, I feel like the upside would be more than the downside at that point. And he was selling them for less than $1 a share at the time, and now they're over like $2.65. So, and I'm looking at recent filings, right? So I wanted to say, okay, what do we got recently? This is not really anything. This is there's really nothing to this. Again, this is so that they don't have any filings to really go off of. So right now, really all you're going off of is like hype, grok, FOMO, and that's it. Again, we're talking about a company that is not at all in the same position that Carvana was in. Calling this a 100-bagger, the next Carvana, seems foolish at best. They lost over $20,000 per property they purchased, and they purchased thousands and thousands and thousands of properties. They're in the hole for like $8 billion, guys. This is they had to lay off thousands of employees. It's like, it makes, you got to do what you got to do, but you need employees to also be able to do what you got to do. They don't just buy and sell houses. They don't just like flip houses. They actually have to fix the houses. So if you're laying off your contractors and you're laying off your employees, how the hell are you going to do that? Wages have all gone up in America too. Wages haven't gone down for that kind of stuff. The cost of goods is sky high right now. Tariffs are hurting everyone, including Americans. You're getting tariffed on your lumber from Canada. You're getting tariffed on steel. You're getting tariffed on oil and gas. You're getting tariffed on everything, and so are we. And they're back-breaking tariffs. 10%, 35%, 50%. It's unreal. You're trying to flip houses in this kind of market? I don't think that's a recipe for success. Like, I hate to be the voice of reason or caution out there, because it seems like no one is ever the voice of reason or caution. Either people are like full doom and gloom, their channel is always doom and gloom and the fire is always going, or they're endlessly pumping whatever ticker is the flavor of the day, or the flavor of the week, or the flavor of the month. There's just never-ending pumps. Okay, Nvidia to 5 trillion, guys. It was 2 trillion. Nvidia was 2 trillion in a when the tariffs hit, and it collapsed the stock under 98. And in 3 weeks, it's 4 trillion, and we're talking about 5 trillion. It's mind-boggling. The level of greed we're at. We've got to be at extreme greed. I don't see how we're not. It's definitely greed. But I would say it's extreme. Yeah, extreme greed. I'm not shocked. I'm not surprised. It never ends, and we've been in an uptrend, guys, for over 2 years. Over 2 years, we've been in an uptrend. It hasn't actually. That blip was only a 3-week blip, or 2-week blip. It was a 2-week blip, and it was fully recovered, and we're beyond that point. So we've been in an uptrend for over 3 years almost, or like approaching 3 years. They're still losing money. They're not making money. And if you owe $8 billion, like, banks are going to come in to collect. Investors are coming to collect at some point. So what do you got to do? You got to sell securities. You got to sell shares. Well, you're going to sell shares at $2 a share? They're going to need some serious retail FOMO to get into this. This is the danger. Is that's, they might let it run. So maybe we can still get a pump off this 265 or whatever. But the bag holders are going to be, you're going to get smoked for 40% if this thing gets diluted at this level. The reverse split's going to be dangerous as hell. The stocks always fall on a reverse split. If it's a 10-for-1 split, that'll bring the float down to 72 million. But it'll bring the stock price to over $20. That's not attractive to retail on a share price front. And it's easier to own the float when it's that low, but not, because it's harder to get retail to buy in to own the float. So it's kind of like double-edged sword here. We don't really want to see them do that. Personally, I don't think. I think just if it recovers, it recovers. But a stock recovering or declining isn't going to put money in their bank account. They need money. They already sold stock for money. So the stock could go to 10,000. That's not going to put more money into Open Door. I don't seem to understand why people on TikTok don't understand that and don't convey that to the people watching their content. Only managing the business effectively is going to put money in their account and give them cash on hand, additional cash on hand. They have about 750 million or something like that cash on hand. Right? But they're losing 300 million a quarter, over 300. So they've got 2 quarters, guys, to go. That's it. And they're out of money. So, Cash flow. Give me 1 second here. I'm just going to pause this and try and find this. Yeah, cash reserves. Okay, they have a cash pile of 768 million, but like check this out. Their debt to equity ratio, let me see if I can make this bigger. There we go. Okay. Cash pile of 768 million. Their debt to equity ratio is 5.43, worse than 96% of all of its real estate peers. And the worst two markets right now, the worst two affected stock sectors are medical and housing. It's in one of the worst of all of them. You know, you've got consumer cyclical, you've got tech, you've got ETS, Bitcoin, Ethereum, you've got airlines, you've got cruises, you've got, you know what I'm saying? You've got industrials. Out of every sector, defense, weapons, everything. The worst is housing and medical, and we can see that for medical. You got MOH got crushed. Like this is a medical insurance company. All of these medical companies, $300, guys. July 1. And Friday it closed at 182. UNH. All the CEOs were buying and everyone was trying to FOMO in. You just lost $40 a share and hundreds of dollars, right? Moderna. Moderna, you piece of trash, garbage, scam of the century company. Burn in hell. 500 to 31. Open Door is not going back to, I don't think it's going to these levels, guys. This was when no one knew what the hell was going on in 2021 and 2022. That might as well be light years away at this point. Look at the difference in 2021, and this is Nvidia. $9. 972. 9. Open Door is not, you know what I'm saying? This is the reality of what they're doing. Every time it's popped above this line, here, right? You might have got a little bit more run and a massive drop. Right here, look at what we got here. It was $4. It had a little bit of a blip, went to 5.30. Okay, and crashed to $1.80. It then went back up, went to 4.50, just under where those top end bag holders were, who were like, please God, go up. And you know they didn't sell then either because they got greedy. They're like, that's just a reversal. It's turning around. They didn't sell there either. They just got more bag holders in. And it went from 4.50 to 50 cents, guys. It had to say, we're going to do a reverse split. We're setting it up. We got the paperwork going. You think this is going to hold, you're probably out of your goddamn mind. And I'm okay being wrong with that, but that is not where a seasoned investor enters. You don't enter. It's fucking parabolic to 91 RSI and then hope that it goes to 100 RSI? That it goes to $3 or $4 magically overnight because of some TikToks. Oh, they're all saying the Reddit crowd in the game, this is the next GameStop is what I heard. It is not the next GameStop. GameStop was, again, during COVID. It was, for starters, it was people didn't want to lose AMC or GameStop. We thought they didn't want to lose movie theaters, and they didn't want to lose their video games, their beloved video game store. So we collectively went into these companies basically financing them. Literally what we were doing. Because they kept diluting on us. Not from us investing originally, because they kept diluting and people kept staying in. Okay? To raise capital and make money. They're going to do the same thing. They have to. They don't have a choice. 2/4 of cash is not enough cash to run anything. They'll be out of money before December, guys. Be out of money by the end of the year, and interest rates aren't coming down anytime soon. Calling it the next GameStop, whoever, I don't know who it was, but that TikToker or the YouTuber, I would just take them off my list because they sound like a retard. Okay, those were very specific situations with a massive retail following of people that cared. Do you think retail openly supports and actively wants to get behind a private equity company that is part of the problem of why this generation, myself included, we can't afford homes? No one can afford to live anywhere because private equity comes in, buys up houses above market, tries to sell them for even more than market. When they don't sell, they rent them, pulling housing off the market, artificially causing stock to fall, availability to fall, scarcity, artificially induced scarcity because they don't actually have buyers for the homes. Boomers increase the price of their houses. Houses guys that were in Canada, houses that were $500,000 2 years ago are $950,000 now. Houses on the West Coast and in Toronto, houses that were $125,000 are upwards of $2 million for the no one can afford shit. No one can afford this. Okay? They're trying to make now they're building buildings in my city that are for rent only. They're not even trying to sell the units. Just before COVID, you could get units like an apartment and like a 900 square foot starter apartment, 2-bedroom, $121,000 to $179,000 depending on all the finishings. I was going to buy one, $129,000. I was like, it's like so bare bones, but that's super cheap. I didn't pull the trigger. Ex-girlfriend of mine did. She resold for like 4 times. Three times. Well, she has like $359,000 or something like that. Okay, so I don't know, 3 times. Anyways, the point is, but it's still some piece of shit. 900 square foot place. It just tripled in price in a few years. Okay, so in the 50s, we could a father could afford a house for his whole family, plus a car, plus appliances, plus TVs, plus baseball, plus football. Put his daughter in ballet, send him to school, send him to summer camp, have vacation time, like take a vacation. You can't have any of that because of companies that are like this, pieces of shit, garbage, cancers to society. Open Door at one point, like I love Zillow, I love to use it, but they were at one point buying houses as well, ruining the markets. Redfin exited. I don't even know if Redfin is a stock. I don't think so. I don't know. So Zillow, guys, just to give you a 1 year, 1 day. This is Zillow as well. 208 when Open Door was high as well, right? What's the difference here? There's no difference. Okay? It's the same. It's the same. One was a piece of shit, ran horribly, and has almost gone bankrupt. The other one turned it around, stopped buying houses. It's in an ascending channel right now, even right now, and it's like $77. This company is excellent too. Every property I inquire on, they're like hitting me up right away, giving me the info I want in a non-pressurized manner at all, in any way. Local realtors. This company, I freaking love Zillow. It's a great company. Open Door, I don't know about Open Door. I don't think so. I think it was kind of a scam to begin with. They got overzealous. Does it look attractive? Considering Zillow has turned around. Does it look attractive because people think, hey, interest rates are coming down. That's going to be good for Open Door. Sure. But that's not going to change all of the houses on the market that people still can't afford. If houses go up 300%, guys, and they come down 5, no one's rushing to place multiple bidding wars. There was bidding wars for houses in 2020 and 2021. I don't know why a pandemic hits and people's first instinct is to buy their biggest purchase of their whole lives. A house and a car are your biggest, most expensive purchases of your entire life. And if you could afford it, a boat, a boat or a motorhome. That's it. There's no other. And then education is mixed in there, but that's not considered an expense, which it is. It's considered an investment. Whereas depreciating assets like a boat, a car, in some cases a house. A lot of people are underwater in their house right now. They're not always appreciating, but traditionally appreciate. But a boat, a car, and a motorhome would be a depreciating asset. Okay, there was bid wars. There's no such thing like that anymore. You'd be lucky to get houses are on average right now 120 days on the market. That's not normal. Usually like 22 to 31 days on the market. Okay, if you're gonna go in, there's a real risk they can still claim bankruptcy. I said by December, and you're going to be hearing about it well before December. You may want to wait. You may just want to wait, okay, and see if they do the reverse split on July 28th. It's the end of the week. It's the end of the week, okay? So you don't need to rush in now. If they announce that reverse split, you probably just dodged a bullet. If they don't announce it, maybe now you can start buying some stock, whatever the price is. That's my 2 cents, right? I'm not giving you advice. I'm not telling you what to do. That's probably the way I'm going to handle it. Because I can just put that money elsewhere right now. I like Navitas. I like SRFM. I like Webull. I don't need this stock. I don't need to enter when it's up 500% because someone said it, because one guy said it's going to be a 100 bagger and every other analyst is saying it's a hold or a sell with 60 cent and $1 price targets. So in 2025 Q1, so this year, their revenue was down 2% year over year. It was a slight beat, but the revenue was down. Okay, they only had 559 million in cash. Sorry, I thought they had 768 million. Apologies, they only have 559. So they're cash burning. They still only have 2 quarters left. Okay, they're still buying houses, by the way. I don't know why. They're buying houses. They're paying 10% below market. 10% below market with high interest. You shouldn't be buying any houses. Sell the houses you have. Take your money and do like every other company's doing right now and do a Ethereum or a Bitcoin strategic reserve with your cash. Stake it. Get 3% to cover some of the percents that you have to pay all of your loans. Maybe call it a wash and see if you can turn it around in the meantime. Like, I don't know. They still sound like they're being ran like shit. So there's no active warrants. That's one thing. There's no impending dilution, but a proposed stock split. Okay? Which I'm not hearing from any of the TikTok people. They're not talking about it. They don't want to talk about risk. They just want to talk about FOMO in and you're going to be a bajillionaire. Okay? They had a 6.3% increase in the number of shares just in the last year from compensation and RSUs, or in this year. There was it said somewhere in here that there's like a 50% chance, 49% chance. That's what the analysts are suggesting of this company filing complete bankruptcy. Okay, they file bankruptcy, it's going to be worthless. Don't say it won't. Like, Bed Bath & Beyond is gone. They said they were going to file bankruptcy. They filed bankruptcy. They're gone. ENDBQ, a while ago, gone. Revlon B, I'm pretty sure that's gone. Hertz came back from it, but the original shareholders, they only got like 20 cents on the dollar. What was that bank? We were in Deutsche Bank? Deutsche Bank. We got fucking like 80 cents a share on that shit. Shareholders, and most of the time you don't get any cents a share. Do you want to buy it for $2.65 and get 80 cents or maybe 0 cents a share because they claim bankruptcy and the thing tanks and collapses? Bankruptcy is not always a what do you call it? It's not always a 100% like given, okay? That they are toast and never come back from it. But like Carvana didn't claim bankruptcy, okay? They were on the brink of it, but they didn't do that. This company might have to do it because they don't have money. And if they don't do it, Okay. I gotta adjust this. If they don't do it, then it's gonna be because, oh, you can't even see that. Is my face in the way after all that? I didn't have my recording window open. Yeah, you can see it. Who cares? Whatever. If they don't do it, they'll have to dilute to be able to afford to not do it. It's not. It's like it's not a. It's not a choice. That'll be. They will have to do that. Like I tried to go through the news feed and see if there was anything else I could notice. Again, all they ever do is say, "Is the next Carvana? Is it the next Carvana? Is it?" That's all they fucking say. It's all FOMO hype, and that to me, all that sounds like, guys, is paid propaganda articles. Paid. Benzinga is known for it. Seeking Alpha is known for it. There's really nothing behind it. Okay. 1 second here. So the guy pumping the stock, by the way, is telling the CEO Kerry Wheeler to buy stock, about $70 million of stock at market. He's suggesting that the guy does that. It wouldn't be hard. It would not be hard if this CEO was listening to buy calls and then buy the stock. Get people to loan them money and buy the stock. We're talking about a company that owes $8 billion. That's 8,000 million, and they want them to spend 70 million, a fraction of what they owe, to make the stock go higher. All the investors know. So this is a scam that could play out real well. This is something to pay attention to. So, like I said, you got to pay attention to J.P. Morgan if they upgrade it, and you should definitely be paying attention to seeing if the CEO buys shares. He buys shares. It's another pull the trigger, okay? But I don't for a fucking second think that this is the next Carvana myself. And again, I hope the company goes bankrupt, frankly, because private equity has no business in owning any houses. It should be illegal. We don't allow foreign investors in a lot of countries. Thailand, you cannot buy a house. You can't buy a house. They don't want to sell you fucking land and houses. They want it for their people. I believe Vietnam's the same. I believe many countries are like this. Canada, apparently no foreign investment for farmland. America, no farmland for foreign investors now at this point. Restrictions on foreign investors now in Canada. We never had it before, but it's too late. They own fucking all of Western Canada and all of Toronto. So, like, the Chinese own Western Canada. So a little too late. Now it's like you can own two places, and then you get like crazy tax after that. It should have been like that before, though. They own some of them own thousands of places. So if we're not going to allow that, why are we going to allow a company to just make a shell company, raise a bunch of money through the stock market from total strangers, spend it frivolously, lose hundreds of billions a quarter, but totally destroy and imbalance the actual markets so that people can live and survive and be alive? I fuck this company. I don't have any. This is not AMC or GameStop. I'm not YOLOing, hodling to save Open Door. Don't give a shit. Terrible idea that we allow this to begin with. Not a fan. Half the news on this is also super annoying. It's not even related to Open Door, which is also like, really cautions me there too. It's like it's all headline driven. There's no substance there. There's no actual news. Again, we just go back June 9th. It's glaring. They've already filed preliminary proxy, so they have filed something that they could activate whenever, and it looks like it's 1 to 10 or 1 for 50. So again, if it was 1 for 10 and the stock is trading at 225, it's going to go to 2250, and the float is going to go down to 72 million. And if they go 1 for 50, which is insane, which I don't think they'll have to do now, but I would say it would be more like 25. 25 times 265. So stock would be like 66 bucks. Okay. And a float would go down to 29 million, which would be insane. Like, that's extremely small. But a 1 for 50 doesn't even make sense at all. I don't even know why they filed that. 1 for 50, like, why are you filing that? Your float would have been 14.58 million. And even if it was 50 cents at the time, times 50 would have been 25 bucks. Around 265 times 50, it's $130 stock. Seems ridiculous. I can't see them doing that now. 1 to 10 is probably the way that they will be going from here, or even 1 for 110, 115, or 125. The thing why they would do that is because they intend to immediately dilute right after. You can't, like I said, they got to raise money. So if they can raise money at $25 a share or $20 a share, that's a lot better than raising money at $6 a share or $3 a share or 50 cents a share. Which is why you are going to definitely see this thing collapsing. If it does a reverse split, I will short the stock. I don't care if it's available. I will short the stock when they do that reverse split. Now, once it fills, right? Once they spook enough people after that, because they're going to announce, they would follow it up with announcing an offering. Once the offering closes, typically you're safe to get in on the rise up, because everyone says, oh, look at all the cash they have now. Now they can get through 4 quarters or 6 quarters. That's what they did every 1 to 2 months with AMC. Oh, look at the cash, look at the cash. And just kept falling over and over and over again, because they never let up. But strong companies like Tesla have done it a couple of times, and they've put that money right away to gigafactories and in India and in Germany. I was there for it. That's one of my original OG stocks that upped my account 5 figures. Good companies utilize good dilution of like 5%, 6%. Bad companies, like SBET, dilute 375%. SBET diluted 375% last week, guys. Everyone's FOMO pumping, okay, this stock. This is the problem with TikTokers and pumpers and FOMOers who don't share any information with their people other than pump. The market cap is 2.35 billion. Keep this number in mind, okay? Market cap of SBET, 2.35 billion. Okay? They diluted 6 billion stock. 5 billion with a $1 billion add-on. I don't know who the hell is buying this stock. Sold 6 billion. Okay? 5 billion with a total 1 billion add-on. 6 divided 2.35. It wasn't 235 there. It was like 1.6 something. So that's why I said 375. But let's go with their current market cap. So they're diluting over 250%. 256% almost. I've never heard about anything like that in my whole life. Ever. The stock should be trading for pennies at that point. $11 tops. $11 tops. Okay, SBET, they announced that. Because if you're like, what the hell is dilution? That's when you take a piece of pie and you cut it up to 10 pieces of pie, and then you make everybody who had 1 piece of pie, they have 10 now. But everybody has 10. Everybody has too much pie. Not enough substance. It's not worth the same when you dilute it. SBET was trading at 40. It's 20, end of day at 29 bucks. Okay? Trading at 40, end of day. I had shorted it, and unfortunately I sold somewheres like here. I got spooked. I sold, and then it did this, and I went, oh, fuck. I don't know who's buying it, but thank God I sold. And then it went, which is what it should have did from the get-go. It should have never. I don't know what the hell this was. Whoever got, this was a margin call. That's the only explanation, is someone got a fund, got margin called. Had to close. No option. Had to close because the bag holders weren't going to sell. Then once they closed, that's when all hell broke loose. And this, be surprised if the stock is anywhere near that in the coming weeks here. So that's what we got for Open Door, guys. Please be very cautious with the stock. You know, I know we all want to get rich quick, get rich overnight. Let me just, you know what, just quickly look at. I don't think they. Okay, we'll take a quick look at the options changes. One quick look. It's not populating for some reason. It's probably because it's Sunday night at past midnight. So, that sucks. I don't know what the volume is or the open interest or any of that. Unfortunately, this won't populate till tomorrow. But exercise caution, guys. Follow the channel, like, comment, share, subscribe. Obviously, if you valued anything I said here, join the YouTube. It's like $1 US. That helps me out. Leave a super like. You know. Anything to help me out would be appreciative. But first and foremost, gonna say like, comment, share, and subscribe, but I can't seem to find it on here. Seems to be gone. I think I deleted it. Join YouTube, live sharing. Where the hell is my like, comment, share, subscribe? I don't even know. Yeah, okay, there we go. Figured it out. It's not something you usually need to hide, but it can get in the way of the stock chart sometimes. I have a video up on in Navitas. I have multiple videos on Navitas up, but I was 4 weeks ahead of seemingly everybody else there. I just happened to be in the right place at the right time on the news, though. We were watching the stocks market closed. I saw it, right place, right time, and then I did my research right away. I didn't sit around, wait for it to pump to 680. And then try to get my YouTube followers to join in on Navitas. You know, when YouTubers and TikTok guys, when they're telling you to get in here, this is my last thing here. When they're telling you to get in, here and not here, obviously no one got in here, but I'm telling people to get in here. But sorry, not telling people I'm getting in here, suggesting it. You know, providing reasons why. It goes to 9, and now it's back here. When they're telling you to get in here, from 2 to 7, you might be a bit late. You might want to wait. Okay, it did hold support on the 48, just above. Might want to let this thing come back down a little bit. We'll see. I don't know if it can. I don't know if it will, but that's what I got for you guys. Again, Open Door, you are not the next GameStop. You might be the next Carvana. I fucking doubt it. I think that is reckless talking from one guy who ran options, right? Carvana has been around since before 2018, since 2017, okay? It's come full circle. That's what you call a cup and handle. Carvana's done. I'm telling you right now. Carvana filled. It ain't going to go higher. Okay, it's over. That's going to be coming right back down to the 320-ish, and then probably somewhere around the 275. Should be an easy short there. It's got the history. Open Door doesn't. Open Door started out as a basically scam, just like Moderna and all these other. You want to see another sort of hyped up scam from around the exact same time. Oh, look at that. Peloton, okay? Oh, everybody's buying a stationary bike. Like, what the fuck? You couldn't give away station bikes in the 80s and 90s, okay? $171 down to $2. It's $630. I don't even know who the hell even bought this thing. They couldn't give it. Their treadmills were killing babies and dogs. Facts. Go look it up. They're just gonna get their asses sued off for that. It was like 25 deaths. It's trash. I don't know why who would want it. Open Doors is in the same cluster of just failed. What about Workhorse? It's not even around. Workhorse. Workhorse? Oh, okay, it's $2. COVID darling, guys. I've been doing this for 20 years. $10,000. That's what happens when you dilute and reverse split. It was a $30 stock. It wasn't 10,000. That's what you call reverse splitting, diluting, reverse splitting, diluting, reverse splitting, diluting. They were supposed to get a UPS contract, never came. Okay, they actually had IKEA as one of their vendors. Seemingly good company. Good, even decent companies, they fail. One wrong move, one slip up can destroy the company. Maybe Open Door already had that moment and they're turning around. Maybe. If it goes to 5, you'll double up. That'd be excellent. But the risk is you're entering up 550% from a few days ago. That's the risk. If I was going to place a call, like if I was going to place a buy on this, okay, give me a minute. I'll load it up on the screen. I'll just place some. I would be looking at $1. You're going to go in on the bottom of this one. I'd be nice to get in here, but I don't think that's happening. So about $1, $1.55, $1.65. Okay, you're going to be wanting to come in here. Is it going to show up on here for some reason? It's not showing up. Oh, that's Carvana. Sorry. Wrong stock. Right? You're going to be wanting to come in along these lines here. $1.55. Right? You just let the chart tell you where are the buyers and where are the sellers. Join my Discord, right? The link will be pinned in the comments in the description. I have the chart set up. It's been immaculate for years. Okay, I have the exact numbers you want. 186. Get rid of the 186. So you're going to be looking at like these numbers. 149. And let's get a 1 day, 1 hour going. So that's what it looks like on the 1 day, 1 hour. We're off in no man's land here. But the MACD, the 48 is 179. You can be coming down to like 132. Okay, these are your levels for Open Door. Then I wouldn't have any issue if I got filled on those, just for the, for the morning, something like that. That's what you're looking at. 185, 165, 155, 149, 132, 125. Notice how I'm not really doing anything up here. Your view app is 2. I'm not really going to go off that. We can take a quick look at the 15. It's probably pointless because it's gone parabolic. And we're just letting the charts tell us where bull flag down there. I don't think it's going below 1. It's definitely not going to go back below 1 at all. So 100% it won't. And then I think the absolute highest you want to pay is like 202, 201. I wouldn't want to get in anywhere near that myself, but because this is, if this gives this back, if that 2 hour 1 year 1 day, okay, if the 1 year 1 day, if this fib retraces, what was in the after hours? 265? Fucking, it's 265. Why it's not showing that? I don't know why. We're going to go all the way up here. It's 265 in the after hours. So I don't know why it's not showing that. Until like 180 something. Oh, that is. So a fib retrace, 61.8 is pretty accurate. It's 230, 50%, 220, 38.2, 210. So these are your other levels. 100% retracement of yesterday's move would take you back to 176. If it does that you're looking at a tweezers, it's going to go down even further. It's going to go ba-boom, ba-boom, ba-boom. It's going to go 3. Most likely it'll be 3, and then it'll probably rocket right back up off of that. Only because it was 265 in the afters. I don't know if you could get it below, like the 50 percentile is 220. You know, we can move this and say what was the actual day chart. 230, 231. And if we do the whole move of the last 3 days, if we do the whole move of the last 3 days, assuming that new shorts enter and this begins to cool. Let me delete these orders. Okay, that's what you're looking at. You're looking at somewheres around. So it would be a for sure 206. That's going to fill if it does come back down. I need to move this a bit. There we go. That's more lined up. So the fib don't lie. Okay, so if it does come back down, 205, 171, 50% is a 50 chance it's coming to 171, guys. Straight up. 50 chance. 171. 1,000 shares. I'll take 1,000 shares at 171. Probably take like 5,000 shares at 171 if this FOMO continues. And then bottom line, $1.11. It's probably not going to go below $1.11. So what I'm going to do, I'm just going to quickly upload this photo. Actually, I don't really want them to see that I'm looking to buy there, though. I would prefer to buy it around $1.50 there. So we'll get it there. We'll get it there, and we'll get it at like 120, something like that. We'll leave some open orders like that. If it falls there, it falls there. If not, like I don't really give a shit. A psychological level would be $2, by the way, and 150. It's just human nature. So we'll get this picture uploaded for Open Door for the Discord. And we'll leave it at that. And hopefully you guys are able to make a sound decision based on this video. I know it's a bit of a long one, but there's a lot to say on this. This is a 1 hour video. What are you going to do? You can't really talk. Like, it's hard to make money. It's easy to lose money. If you can't spend an hour trying to save yourself from making, trying to save yourself from losing a bunch of money that it took you maybe months or years or decades to make, maybe the stock market's not for you. But if you can spend that time, you're going to be that much better off for it, guys. Thanks. Free.